welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition of Macros with Mythili, we are extremely privileged to have with us Dr. C Rangarajan, presently Chairman, Madras School of Economics, who has a unique distinction of long experience in both monetary and fiscal policy in the course of an illustrious career as Governor, Reserve Bank of India, Chairman, 12th Finance Commission, Chairman, Prime Minister's Economic Advisory Council, Governor of the state of Andhra Pradesh, along with Odisha and Tamil Nadu, Member Planning Commission, Member Rajya Sabha, a whole host of titles. Most people would have been content to sit back and relax after all that, but not Dr. Rangarajan, who continues to write in many leading dailies. Thank you, Dr. Rangarajan, for joining us today. Let me start with monetary policy. We've had two COVID packages from the RBI, the latest on Friday. Given your long experience in the Reserve Bank of India, first as Deputy Governor and then as Governor, how do you see these packages? Has monetary policy done all that it can? Or is there more that can be done by way of forbearances, say reducing capital adequacy ratio, maybe even lending directly to the stress sectors? The US Fed, for instance, is providing credit to banks that issue payment protection loans, program loans to mid-sized firms. What are the additional tools, conventional and non-conventional, that the RBI could possibly use, Dr. Rangarajan?
You know, the Reserve Bank of India has an important role to play in a situation like this. Certainly, the financial system can play a role in stimulating the economy. Therefore, I would say that the actions of the Reserve Bank in terms of stimulating the economy by providing the banks with the capability to provide a lot more credit. I think this is important because the only way in which we can essentially stimulate the economy from the financial side is to make the financial system strong enough, capable enough to provide credit. We are facing a very extraordinary situation because the banking system itself was not in a very strong position even before the advent of corona crisis. And therefore, the ability of the banking system to provide credit was somewhat limited, and therefore several steps have been taken to do it. I mean, I do not want to go into the various measures, everybody knows, but basically what I see the Reserve Bank doing is to provide adequate liquidity in the hands of the banks to enable them to lend. Second, I think what they have done is really to enable the banks to lend by removing some of the restrictions that flow out of regulation. This is what we call regulatory forbearance. Therefore, the provision of additional liquidity combined with regulatory forbearance should enable the banking system to provide more credit. Therefore, taken together, I do believe that the system can play a role in moving the economic system, the production system forward.
RBI has said one of the reasons why perhaps they have become risk averse is that in the very same circular that talks about allowing banks to give moratorium, the RBI says that accounts provided relief under these instructions shall be subject to subsequent supervisory jurisdiction with respect to their justifiability on account of the economic costs of COVID-19. The problem is that as long as RBI is going to sit in judgment of the bank's commercial judgment, and this is done in hindsight, with the wisdom of hindsight, banks will always be reluctant to lend. So do you not think that the RBI should do something about relaxing this kind of very strict, mandate?
I agree that it is a very special situation, and the measures are being introduced in order to overcome the problems created by a new pandemic. But and the recognition is very much there because they are allowing something which they did not normally allow, and therefore this moratorium has been given. It is not a normal thing. Therefore, I would expect that while as a regulator, they have made this observation um, um, to make the banks realize that, or to make the banks feel that they should, even though it is a special situation, should exercise judgment. Therefore, I would really think that taking this situation into account, the RBI will behave while assessing the performance of the banks in a different way.
I'm glad you mentioned that, sir, because in an exceptional crisis like this, the credit risk increases exponentially. So would an institutional mechanism to guarantee the credit risk, whether by government or by the RBI, be a better way of ensuring credit flow? In the US, for instance, again, the Treasury and the Fed have both stepped in to backstop loans. Or do you fear that this could create a moral hazard?
The point really is that even the new funding that is being made available by the banks is taking into account the current situation, and the risk should not be very much beyond what is normal. I mean, I don't think that the bank should take some extraordinary credit risk. I think this is not the interpretation. The interpretation is essentially whether the regulatory forbearance is adequate or not. I don't think that they are essentially looking at the credit risk. They are essentially looking at how the banks can start performing.
So in its TLTRO rather, the Targeted Long-Term Repo Operations 2.0 announced by RBI on Friday, the RBI announced a package that was meant for NBFCs and microfinance institutions. Mutual funds were not included this time. But the governor said that this money was meant for banks to invest in investment grade paper of NBFCs and MFIs. But the problem is not that NBFCs and MFIs that are investment grade are having a problem. The problem is being really faced by those who have less than investment grade paper. So how do we square the circle? Particularly since banks will shy away from lending to anybody other than top-rated entities, Dr. Rangarajan.
Well, there's a problem. And at the same time, we have also to realize that the banks do not indulge in lending, which will finally end up in non-performing assets. The loans of today should not be the NPAs of tomorrow. I think this is also important. But certainly, I think some clarification can be given regarding the grade or the kind of debentures or the loans that that can be financed. I mean, I suppose making it grade A, I think, or A plus or whatever it is not certainly going to help the middle level kind of enterprises.
Welcome back. You're watching Macros with Mythili, and I'm in discussion with Dr. C Rangarajan, former Governor, Reserve Bank of India, former Chairman of the Prime Minister's Economic Advisory Council, former Chairman of the 12th Finance Commission. Dr. Rangarajan has worn many hats in the course of a long career. Sir, there is unanimity that this crisis is far worse than the 2008 crisis, in which case the need for coordinated monetary and fiscal policy becomes even more important. We've seen some fairly strong action from the Reserve Bank of India, but a much more feeble response from the government. In fact, the current thinking in government seems to be that rather than rush ahead with a large rescue package like many Western countries, we need to adopt a more step-by-step approach. Do you agree, or will a package that comes in dribs and drabs simply not be enough?
I think the government is today facing not only an economic problem of stimulating the economy, but also meeting a virus whose nature and potential is not fully known. I think quite a bit of expenditure is being incurred by the government to combat the virus. And therefore, I would say you should look at expenditures into three categories. First, there are the medical and health facilities employment of both doctors and paramedical staff, a purchase of ventilators, and so on. So there is a whole lot of things that need to be done on health and medical care expenditures. Second, there is a very large amount of alleviation measures that have to be taken. That like providing for the people who have been thrown out of employment, including the migrant labor. And this can up to a very considerable. And third, I think the stimulation expenditures come in. In my view, first and foremost, the priority must be given to the first two categories. I think the government must spend without stint on what is needed in order to curb the virus. Therefore, the medical and healthcare expenditures should go on at a level that is required to combat the virus. Second, I think unless we take care of the people who have been thrown out of employment, and perhaps here, I would agree with you that the government should do more than what it has been doing. I think the migrant labor problem is very serious. I think it's a very sad sight to look at the migrant labor walking hundreds of miles in order to reach their home. Therefore, there is a whole lot of expenditures that need to be incurred. I would urge the government to spend a lot more than what they are doing on that account.
So in that case, what would you say is a safe upper bound for the fiscal deficit? You've argued in favor of temporary suspension of the 1997 agreement on automatic monetization of government deficit, of which you are the architect. The fear, however, is that the suspension may not be temporary, but will become permanent. So in that case, would the issue of some kind of special bonds, say COVID bonds on the lines of the recap bonds or oil bonds, be a better alternative? Because then the issuance would end once the present crisis is over. So what do you think is the best way of financing this expenditure?
Well, the point is that the system that was abolished in 1996 or over a phased period is a system of ad hoc treasury bills, which is bad, because under the ad hoc treasury bill system, neither the government nor the RBI knew exactly how much was being actually being funded by the Reserve Bank. I think it was an automatic monetization of the deficit. But we have now moved to a situation in which that at least the extent of monetization can be determined by the Reserve Bank, so that it can limit what the monetization should be. Now, whatever the name of the bond that you issue, what is essentially required is that bonds will be issued by the government, and quite a bit of it will have to be picked up by the Reserve Bank of India. I think that is what we would call the monetization of the debt. So I probably think that something like 1 to 1.5% of the GDP will be monetized willy-nilly. I mean, because the expenditures of the government will increase. They have to somehow find the money to meet all the kinds of expenditures that I talked about. And therefore, it is not possible for the government to raise resources otherwise. Because remember, the need for additional resources will not just be equal to what we are calculating on the because of COVID, but also because of the fact that the budgeted expenditures themselves will not be able to be met without some kind of support, because the revenues will go down. I mean, the assumption in the budget was that something like the real income growth will be somewhere around 6%. Price level will be increased by 4%. Therefore, nominal income will increase by 10%. That is not going to happen. And therefore, the additional resources that the government requires is a lot more than what we have to spend because of COVID. Therefore, willy-nilly, I think the Reserve Bank will come in and do it. This is an extraordinary situation. But after all, please remember that whether the Reserve Bank of India provides liquidity to the banks and enable the banks to invest in government paper, or the Reserve Bank of India directly doing it, ultimately the burden or the ultimate lender is really the Reserve Bank of India. So it's it is always possible for Reserve Bank of India to provide liquidity to the commercial banks and ask them to invest in government paper. But yes, I agree. I mean, I personally think that the extent of deficit financing by the RBI could be of the order that I mentioned earlier. That will have its own consequences. And that, I think, is something that people don't want to look at it now, because that even talking about it is considered to be not proper. But I would say that one has to think in terms of what would happen as a result of that. And therefore, I do not think that the inflation in the second half of the year will be 2% or 2.2%. I think that's, I cannot see the Reserve Bank of India pumping liquidity both to the banking system to provide support to the private sector, and then pumping liquidity to the government to support its expenditures. Then at the end of it all, the inflation will only be 2%. I don't think so.
So another option, which is something that Mohandas Pai, former CFO of Infosys, has suggested, is that the government can ask the RBI to transfer some more of its reserves. The Bimal Jalan committee had laid down some norms, but there is a key sentence in that report which says RBI's provisions must be seen as the country's savings for a rainy day. And by all yardsticks, this is definitely a rainy day. So can the government ask RBI to transfer some more of its reserves?
I do not know whether you are essentially talking about the past
Yes.
accumulation. I'm quite sure that the Reserve Bank of India would probably provide a lot more out of the current profits. I mean, I think it is best to see it in terms of the current profits or the current surpluses, as you would call the profits is not the right word. And I think that one should really start first with transferring the entire surplus of the year to the government. I think that's and then see what needs to be done, because in the final analysis, if you come to a situation of transferring the entire surplus from the Reserve Bank of India to the government, even when the bonds are picked up by the government, by the Reserve Bank, the interest income on that is also becomes part of the profits of the Reserve Bank, and therefore it will be gets transferred. Therefore, it is all giving with one hand or giving with the other hand. Therefore, I would really think that as a first step, probably this is a year in which the current profits, 100% of the current profit should be transferred to the government.
There's been a lot of talk of suspending the IBC, the Insolvency and Bankruptcy Code, at least for some time until we get over the crisis. Because the moment you say that any NPA account, even with the more relaxed definition, banks have to refer it to under the IBC and take it to insolvency courts, will in fact be against the spirit of coming to the rescue of businesses, especially small and medium. So is there a case for temporarily suspending the IBC itself?
I'm not an expert on this area, but I don't think that suspending it temporarily would be an appropriate step at all. I mean, I think it is in fact the introduction of this code that created some fear in the minds of the borrowers. I don't think we should do that. But there are always ways of handling it. After all, I mean, as per the judgment of the Supreme Court, the Reserve Bank of India has to do it on a case-by-case basis, actually. What they really ruled out was saying in all cases. Therefore, a case-by-case analysis is an occasion on which to think a little bit more on whether it should be referred or not.
So you were chairman of the 12th Finance Commission, so you understand the dynamics of center-state fiscal relations very well. The RBI has allowed a temporary increase in the ways and means advances by 60%. Is that enough, given that the bulk of the COVID-related expenses are actually borne by the states? So is there a case for the center to do more, say borrow and then on-lend to states, thereby reducing their interest burden?
No, I think it all depends upon what we call the government expenditure or what the government should do. I certainly think that part of what I call the medical and healthcare expenditures are being incurred by the state governments, and therefore the government of India should raise I would consider the government of India giving it to the states a certain part of the expenditures and treat it as the part of the general expenditures of the government. What I say is that implicitly a part of the expenditures incurred by the states should be borne by the central government. I think, and they can go and raise the money in total for whatever they require. Therefore, there is no necessity for something separate. I think the government of India should support the state governments in their efforts to control the virus, and support essentially means financial support.
Okay, so the IMF calls this the worst recession since the last Great Depression. I'm too scared to even voice this thought, but could we see the recession worsen into a depression?
Well, I think all the countries are also spending a lot. I mean, this is not a situation like the 1930s when the governments were of the opinion balanced budget was the basis and so on. Now everybody seems to think that budget is not a constraint. I mean, I think everybody wants to spend. Some people talk of spending 5% of the GDP as the expenditures of the government. Some other people talk even higher than 5%. Therefore, I think by virtue of the fact that a lot of expenditures will be incurred by the government and supported by so many means, including the support from the central bank of the country. Therefore, I don't think that recession will degenerate into depression because of the manner in which we are approaching the problem.
Yes, I hope you're right, and we've learned our lessons from history. But my last question to you really is this, that you were governor in the years immediately after the 1991 reform process, when the country was struggling with a huge balance of payment crisis, and you played a key role in the shift from administered exchange rates to first a dual exchange rate and then to market determined rates. Are you missing all the excitement of dealing with a crisis on almost a daily basis? Or are you relieved that you no longer have to handle all these things at the helm of the RBI, sir?
I think when you are in a position or in authority, then you handle it. But at the moment, it is not a foreign exchange crisis. I mean, I think it is not really. It is a crisis of a different type. And this is the first crisis in recent memory, economic crisis in recent memory, which has been triggered by a non-economic factor.
True.
It is not triggered by an economic factor. It is triggered by a non-economic factor, which is a pandemic. And therefore, in some sense, it is very curious and very interesting to see how to handle this particular problem. After all, the 1/3 of the expenditures that I really think that the government should be spending will be on the health and medical care. I think this is not the way the economic crisis used to be handled before. First of all, you are spending a lot on which nobody is making an issue. Spending money without stint on healthcare and medical expenditures. Therefore, each crisis has its own characteristic, which makes it somewhat specific. But certainly the magnitude of this crisis, the way in which it has spread all over the world, is something very different. I mean, even economic crises of the previous periods has not within a short period of 3 months covered the entire world and brought economic activity to a standstill. I do not think of any economic crisis where factories have been shut down, where transport is not moving, and so on. Therefore, in that sense, this is an economic crisis of a very, very, very different character.
Well, I'm afraid we've run out of time completely, so I'll have to end this discussion. Thank you very much, sir, for taking time out and sharing your views with us. And for the benefit of our viewers, I must add that Dr. Rangarajan started his career teaching economics at IIM Ahmedabad, and his book, Principles of Macroeconomics, co-authored with Dr. Bakul Dulakia in 1979, still remains one of the best readings in basic macroeconomics. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at TT Now.